Good afternoon, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hope all of you had a very good day of trading today. And in today's markets, guys, well, there's never a dull day in the markets, is there? Today, once again, unfortunately, the markets were red. The SPY and the QQQs down over 1% respectively. But we did have a lot of news on the forefront of today's action. Although there was no new tariff news, we did have a few headlines out of the Russia-Ukraine war situation in which we saw a somewhat temporary ceasefire in terms of a call to pause Ukraine energy attacks and on infrastructure, but no full ceasefire. We'll take a look at that in just a few short moments in the video as well. We also had a few key impacts from tech headlines, namely Google purchasing a cybersecurity company for $32 billion. We'll take a look at that article when we cover Google's technical analysis in the later portion of the video. And of course, we had some news events from NVIDIA. Of course, NVIDIA hosting the GTC conference, in which we saw several new updates from the chipmaker saying that they were well positioned for the shift in AI. That too, we will take a look at it later on in the video when we cover NVIDIA's section in the technical analysis portion of the video. So a lot of news in the markets today all across the board, but it didn't help the markets to push green nevertheless. In today's video, guys, we're going to recap a bunch of things together. Number one, of course, go over that ceasefire news between Ukraine and Russia, which is a step in the right direction, but definitely not a full end to the war. Number two, we're going to be going over some technical analysis here on our major market indexes. See, after today's decline, where do we stand on the SPY, the QQQs, and everything else? Is it still a good time to be buying, or should we possibly still be waiting on the sidelines with some cash? And thereafter, guys, get into our sector-specific technical analysis, namely all of our big tech names are under the gun for some TA today. We'll take a look at whether or not these are some good buying levels for some opportunities in some of our big favorite tech names. And overall, guys, should be a very fun video. So let's jump right into the action, shall we? So moving into the SPY, down about 1.08%, the Qs down about 1.7%, and really the pain started early on in the pre-market, guys. It was not truly entirely at the open. You can see that from the last 15 minutes of the close yesterday into the first minutes of the open here, we were already down, roughly about 0.8% on the SPY and even a bit more on the QQQs, as you can see right there, about 1.3%. So the damage really started pulling back in the overnight session, and that was what met with a very large intra-morning sell-off in the first 15-30 minutes of action on the Qs and the SPY. And then the markets throughout the rest of the day did absolutely nothing, possibly in anticipation of one very large news event that we have tomorrow, which of course is going to be the Federal Reserve interest decision meeting. Now, we're not expecting any rate cuts tomorrow, but we do get a summary of economic projections. It comes out once every quarter, and it gives the Fed's guidance for the rest of the year and even into next year in terms of the direction for interest rates, the economy measured by GDP output, and also the status of the jobs market measured by the unemployment rate. All of that will be in the Fed's guidance for tomorrow, so that is probably why the markets were relatively muted after the open in anticipation of tomorrow's very large day. The expected move on the SPY and the QQQs tomorrow is between 1.2 and 1.4%, so it should be a very volatile day either way, but I think everybody is getting pretty used to the volatility as of lately. 1.5% is like a medium move for us right now. We're used to all these 2-3% candles all throughout this drop, as the SPY unfortunately remains deep into correction territory, and the QQQs as well remains deep into correction territory, still down about 12.3% from the top. Looking into our sector rotation, we have once again a series of big tech names that unfortunately were unable to break green to the upside after 2 days worth of bounce. The bears once again fighting back. On the rest of the market, though, it wasn't terrible. Financials, bit of a mixed result here. Healthcare as well, very mixed amongst the sector. Consumer staples remain a somewhat of a pain point in the market. Walmart and Costco, two of the biggest names, continuing on their decline. After record years in 2024, it was time for them to pull back, and the pullback on them simply continues. Even the bottom half of the market as well, guys, not cooperating too much. So yesterday, this entire heat map was green, and now a lot more damage to the downside, of course, as the volatility continues amidst the policy uncertainty and uncertain macro conditions for the rest of the year. Moving on further on the one-day relative performance, you will see that only energy and basic materials basically made it out alive. Everything else really got pushed to the downside. On the 1 week relative after the last 2 days worth of bounce, the picture is not so dire on a 1 week perspective. Only consumer defensives, cyclicals, and communication services down Everything else to the upside led by energy. On the 1 month, however, of course, guys, the damage is done since we're in correction territory now. The biggest losers there remain consumer cyclicals, technology, and communication services. Largely communication services is Google and Meta, and they have not been having a good time at all. So before we get into more technicals, guys, let us dive into that article, the geopolitical headlines, which would be Putin agrees in Trump call to pause Ukraine energy attacks, but no full ceasefire. As I said, guys, it's a step in the right direction, definitely more progress than we've seen at least in the last 3-4 months. Let's look into it. So President Vladimir Putin has rejected an immediate and full ceasefire in Ukraine, agreeing only to halt attacks on energy infrastructure following the call with U.S. President Donald Trump this morning. He said a comprehensive truce could only work if foreign military aid and intelligence sharing with Ukraine came to an end. Now, this is a very big ask by, of course, Vladimir Putin. We can understand why he wants to do that. So, people don't take the other side of that and essentially agree to a ceasefire while still funding Ukraine on a military basis. You can understand. You may not agree with it, but that's just his perspective, right? Ukraine European allies have previously rejected such conditions as well. That's came up in the past. The U.S. and Russian leaders did agree that further peace talks would take place immediately in the Middle East, but the results of the call amount to a retreat in the Trump administration's position from where it stood a week ago, when they were saying pretty much that they wanted to agree to a full ceasefire and an end to the war. So those are the new developments in terms of the geopolitical front. It is a step in the right direction, a ceasefire on energy and infrastructure in the Ukraine region, as these parties continue to kind of battle it out in this now 3+ year, very, very bloody war, which is quite unfortunate. But obviously, we want to see resolution. Hopefully, those peace talks will be able to advance in a timely manner here over the next 30 to 60 days, which will be crucial to kind of maintain some bilateral negotiations between those two countries. But at least, as I said, guys, it's a step in the right direction, right? We know that there's a lot of catalysts on the horizon still. We know that, of course, Russia has a very big ask right here, and Ukraine will probably not just roll over, but at least, guys, the peace negotiations are underway, and we do have a temporary ceasefire on energy and infrastructure, which is very big to start it off, right? So that's your geopolitical news for the day. Now let's dive into the TA, shall we? So the SPY down another 1.08%. We knew that the bears were still in absolute full control, and any bounces were just pretty much for a lower high. And then it's up to the bulls, guys. Can they prove it to us with a daily trend shift into Jerome Powell tomorrow? Well, we will see. Yesterday, we got rejected at the 200-day EMA and the 12 short-term EMA as well, which I was pointing out. The bounce size overall was not the best, right? Only a 38.2 bounce. It does give the bears more than enough capacity to either revisit the lows or flush. Still a lot of trading before we actually eclipse these lows, but now it's a battle at the lower end of support, guys, and this support range on the SPY is 565 down to 553. If you start flushing these lows, we are indeed heading one level lower, which will be all the way down here, 530 to about 510. Now, keep in mind, we are still in extreme fear conditions right now. Market momentum is still very, very bad. Net new with 52-week highs and lows on the New York Stock Exchange, still at some of the yearly lows that we've seen, not only this year, but all the way back through 2024. Stock price breadth as well remains a bit of a problem, still in extreme fear. As I've shown you the breadth indicators, guys, percentage of stocks above their 20-day moving average, still down at a very low read of 33, not as low as last week, but still amongst the historical lows. If you go back in the last 10, 15 years of data, percentage of stocks above their 50-day moving average still remains at a very low crush level of 29% of all stocks. Great buying categories and conditions in relation to historical norms, and percentage of stocks above their 200-day moving average just not making much progress, still stuck in the mid to high 30% range. Also historically a decent area to start some buys, guys. So I know what you must be thinking. You must be thinking, well, it feels very painful buying when arguably every single day in the markets is red. This is true, and it should feel that way. At the top, when people are waiting for dips, everybody starts quoting Warren Buffett. Be greedy when other people are fearful, be fearful when other people are greedy. But then when the fear actually comes into the markets, nobody wants to buy. You have to think of your long-term self, guys. The next 5, 15, 20 years that you will be investing in the markets. All your purchases now will be heavily rewarded in the future. I know it doesn't feel that way, but every time we're buying in the midst of corrections without knowing where the actual bottom is going to be, it is always going to feel painful. But one thing is for sure, I'm pretty sure everybody looks at this chart and wish that they bought more at the bottoms of 2022 or even all throughout the dips, because now all of those purchases would be rewarded. I'm sure everybody feels that they should have bought more all throughout the dip of COVID, whether you bought here, 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 or all the way down, which you should be doing with your paychecks. Everybody was rewarded ever since. Trump tariff edition #1 in 2018. Pretty sure that everybody would have loved to buy every point of this dip, because look where we are right now. And even something like the great financial crisis, if you were buying all the way down steadily with your paychecks with a long-term time horizon into high quality and very consistent companies, some of the best companies in the world, all of those buys would have eventually been rewarded. So think of your future self. I know right now it feels like we're throwing money in the fireplace, but you should have a progressive DCA ongoing right now into your long-term portfolios. It's very tough to predict where the actual bottom is going to be. The best you can do is a DCA approach. If you don't like buying individual companies, no problem at all, guys. Buy some of the highest quality ETFs in the world. The SPY, the QQQ, or maybe if you're a dividend investor, something like an SCHD. And all of those purchases as well, no matter when you would have made them throughout the most recent correction history, they would have all eventually been rewarded, guys. Think of your future self, invest in your future, and the markets eventually will come back and will reward you. It always has done. You're talking about a market that's been going through so many things in its history, guys, right? 2 world wars, a Great Depression, couple that with a Cuban Missile Crisis, a Vietnam War, a Cold War between the US and Russia, the 1987-1989 market crashes, then in the 1990s as well, the Asian financial collapse of 1997, the tech bubble, the Great Financial Crisis of 2008, COVID, 2022, and the list just goes on, right? Obviously, I'm choosing the biggest ones, but the markets will always simply churn higher in the long term, especially if you're investing in high quality ETFs or high quality compounding and predictable companies as well. So just don't get discouraged in this time, guys. This is when we really need to double down our focus in the markets, identify those high quality opportunities in individual companies, or at least have a DCA approach into some of your favorite ETFs, both in your taxable accounts and obviously your tax advantaged accounts, depending on what country you're in, your retirement accounts and your tax-free savings accounts, some things like the 401k or the IRAs or the Roth IRAs as well, right? So do not get discouraged. Yes, I am still trading, and I'll show you some trades at the end of the video as well. But also, guys, I am starting right now for everybody because I have a long-term portfolio too in the high 6-figure range. But what purpose does it serve me telling you guys buy in a long-term portfolio? I started my long-term portfolios a very long time ago, 2017 and 2018. I'm up a lot of money, high 6 figures, but a lot of you people are just starting off right now. So I figured, amidst the correction, what better opportunity than to start a long-term portfolio with all of you who may be having cold feet right now, which is why I started something very small today. We're starting off with a balance of 3,000. I've added another 2K, should be coming in the next week. We're going to start off with a $5,000 balance, which is very manageable for everybody out there. And I'll show you how I'm going to DCA into this market $200 a week. Now, you might tell me, well, Will, I don't have $200 a week from my job. Well, guys, if you have $50, $100, as much as you can, you should be putting away 10% of all your paychecks for your future self to invest in your future. So I'll be doing $200 a week because I can do more than that, but that's just like an average point for disposable income for most people's salaries, right? So I'll be putting in $200 a week for the whole time that I have this YouTube channel, which will be years and years and years in the future. We'll start it off with 5K, which is a very easy balance to start off with most people, and we'll build the positions from there. We'll talk about that more as the week advances as well, but just showing you guys that I want to start this now with you guys to show you that if we have a long enough time horizon, all these positions will eventually pay very, very lofty profits. So moving on into the SPY, guys, that's the analysis for the SPY overall. Just pay special attention to the lows of earlier last week. But with Jerome Powell, guys, it's going to throw us in either direction in a big move. So don't want to project too far beyond tomorrow. Moving on to the Qs right now, down 1.7%. Also not flushing those of last week, but we know the bounce size was fairly timid as of right now. The lower highs are all the way up here, all the way up here at about 512. And you can see the bounce size was barely 38.2%. It does give the bears a more than enough opportunity to have the rollover either retest of the lows or just flush lower. In the event we flush lower, the next big line of defense is down here, 450 to about 430. It's this pocket of support from the August 15th Black Monday sell-off. and prior resistance. That's going to be another big support zone for the bulls, and we are still oscillating. If we get that one more leg down, we'll be back into daily oversold conditions, but I wouldn't rule the bulls out just yet, right? The bears have the capacity and are advantaged right now for the flush or the rollover. But if Jerome Powell is kind to us tomorrow, we get some more positive data, or the tariffs are possibly lifted over the course of the week. Well, not lifted, but we get some positive news on that front. You guys know this is a very news catalyst driven market, and we can see some upside, but just always remember the resistance is very close up here, 500 down to about 494. So the bears remain in full short-term control right now. I'll show you what swing trades I've been doing at the end of the video, how we can take advantage of these days where we have declines, but also we should be stacking those long-term portfolios and building them now and DCAing all throughout the correction. Your future selves will thank you. Moving on to the XLF financials, guys. So the financials down about 0.12% today. All in all, not too bad. We are still in the context of a big sweeping daily downtrend, though. The bounce size on financials is not fantastic either, about a 38.2% bounce. If we start rolling over immediately into tomorrow, well, we do have support below us, 48.30 down to about 46.76. But all in all, the short-term bears remain deeply in control. The weekly timeframes as well. We are in support right now, and until we flush 47.12, I wouldn't be too nervous. If we do flush that, though, the next line of defense comes right below 46.15 to 45.15. The reason why you get a bit nervous after that is if we flush this, guys, it all becomes resistance, and then you end up with a flush into further monthly consolidation for financials, which could see us drop a few more levels down to the mid 43s if you want to retest the 26 EMAs down there. That will be top to bottom on financials of roughly 18%, which is, if you go back to 2022, it can drop more, but 18% starts to get very, very, very juicy for the banks. Some banks are looking juicy right now, but if you want the juiciest deals, some of them may be around the corner, but who are we to guess when the end of the correction is going to be? Focus on buying some of your favorite companies. The one financial I picked up today in that small little long-term portfolio is American Express. Why? Because the valuation is quite decent right now. Talking about a 6% free cash flow yield and a 1.28 PEG ratio in the future in relation to future earnings growth. Very consistent company, very profitable company, and don't take it from me, this is a very large position for even Warren Buffett's Berkshire Hathaway portfolio. It's about a 14-15% position for him. Moving on to healthcare right now. Healthcare, not reacting too badly on the day, up a little bit during the day and a little bit more in the after hours. Daily downtrend still maintained, though, looking for a lower high into resistance, 149 down to roughly 146.5. So, it's going to be tough for the bulls to really get through this resistance, but can we maybe two-step the process and capture it back? Yes, but objectively speaking, guys, this is an entry opportunity for a short. You have a breakdown below, then retesting resistance, this time as resistance, because it was support back here. Now it's resistance. The stop loss goes above there, and now you're targeting all the way down there. That is roughly, in terms of a short play, right? That is roughly a 2-to-1 trade with the profit target. It is roughly a 2-to-1 risk to reward for a short. That is the setup overall, guys. But if we do come back down here, there are several healthcare companies that I would not mind buying overall, but on the weekly, it's looking a bit dicey, right? Very, very, very dicey price action right here. The bulls really need to make a move through this resistance if you want to have a chance of saving this monthly leg higher, right? Because as of right now in the monthly, is looking like a nice head and shoulders for further downside. Moving on to semiconductors right now. So semiconductors down 1.55% overall. And the damage has been done over the last few weeks on semiconductors. Big leg down, but nice little leg to the upside as well, right? So the bulls have put in a lot of space between the lows. 78% bounce. I would say that amongst all sectors, this is probably the best bounce that we've seen across the board. It gives them a lot of space that if we start losing ground, they have a lot of space for a higher low and change the daily uptrend. But you cannot say the bulls are back in control unless they get the uptrend back, right? A bounce is very nice, but can be rolled over if the bears are too strong. So until I see a confirmed daily uptrend, we cannot say that a weekly bounce is yet underway, as it is still right now in a weekly downtrend. If the bulls give everything back and retest the lows, we are coming right back down here. 200 psychological, it was the bottom of the Japanese carry trade unwind and the bottom of the April fear of inflation concerns as well. That would be top to bottom on the index of around 30%. And not a bad opportunity to be shopping for some of your favorite semiconductor plays if we do hit those levels. It's a great chance now, but if we come down there, it's going to be even better. Moving on to the Russell. Russell down 1.09%. Same concept, guys. Who's in control right here? Well, definitely the short-term bears. Sweeping weekly downtrend and now reverting back into very close to our support range below us, which stands at about 200 down to about 193. That being said, who's in control? Well, of course, it is the short-term bears. The size of the bounce was not that great, similar to the rest of the indexes, right? Size of the bounce, only a 40% bounce. It's an okay bounce, but you would want to see a bit more if you want the bulls to have enough space to recapture a potential daily uptrend. Keep in mind, though, that would all be in the context of pushing into resistance, which right now stands at about 208 up to 216. I'm really not the biggest fan of the Russell guys in current market conditions. I mean, you're talking about growth stocks here, right? And growth stocks, when we're having a growth scare, is probably not the best place in the market to be. If you have a very, very long-term time horizon, the index will come back, of course, but I'll remind you, the Russell just has not been favored, at least in the last 3-4 years almost, since 2021. We have not made any progress on price whatsoever, and I still remain somewhat cautious around these small cap bets. Moving on to the Dow Jones, lastly, the Dow Jones also down about 0.62, no longer in daily oversold conditions, but who's in control here? Still the short-term bears. Size of the bounce was okay, but I was talking to you yesterday, yeah? It's resistance. 200-day EMA is right there, and the horizontal level of resistance as well. Used to be support for the bulls. Now it's resistance. 42,000 up to about 42,005 is that resistance range, and the size of the bounce was okay, but once again, only a 50% bounce. You really would have liked to see them get a bit higher to give themselves the best odds at a daily uptrend. We're not ruling it out just yet because we have a big catalyst with Jerome Powell tomorrow. But suffice to say, if tomorrow's a red day, it's not going to be looking good. Coming back down into support, 41,003, down to about 40,500. I mean, it's the last line of defense, right? The bulls need to get it done for that daily trend change if you want to start to reverse this weekly time frame. Because as of right now, it is just a sweeping weekly downtrend overall and into monthly consolidation. The next stop for the Dow, if you blast through this one, is pretty much all the way down here, 39,000 roughly, 39,200, around the 26 EMAs over there. Now moving on to the VIX. The VIX also, we have to check it. But the VIX, I mean, made some progress today to the upside, but nowhere close to what we saw last week, right? I was saying that when the VIX is high, it's time to buy, and it definitely was a good buying opportunity last Thursday and Friday. The markets are incrementally higher, but there's nothing saying that we can't just spike back up if ever the data from Jerome Powell and the summary of economic projections is not well received by the market. You can expect the VIX to just drift higher, but every time we come into these conditions with massive extreme fear catalysts, it is always a great time to be buying, right? Just be careful if you're making any VIX plays. Very treacherous options chain to play overall in the VIX. So we'll see if it comes back into this level, or if the markets continue their bounce, or we just see reduced volatility, no more of these 2% intraday swings, and we start getting a little bit more muted price action. That is also going to contribute to bringing the VIX down. Right now, we stand at a bit of a middle ground, right? It's not a crazy good time to buy or sell options, right? Because we're not getting, well, we're getting very good premium still with the VIX at 21, but we're not getting the same strike distance. If you're looking to sell put options like me, you're not getting the same amount of margin of safety on those strikes overall, but still very good. I'll show you just a few trades that we locked in throughout the day as well today in the Discord. Moving on to the yields right now. So the yields continue trying to start their curl over. We've been looking for this, right? This is the recession trade. If people are really that fearful of a recession, well, you should be able to see these 20-year bonds really start ticking higher, the same as what we got in the growth to value scare and recession fears that we had in late July into early August. We just haven't seen that fear trade bid from pretty much the long bond crowd right now. But overall, the bonds are trying to find somewhat of a local bottom, which means your 10 and 20-year yields are struggling to mount above their top. If you look on the weekly time frame, it presents the clearest scenario, right? Weekly uptrend, big engulfing move to the downside. You're just looking for a lower high for possibly the rollover. That would be the head and shoulders. Even on the 20-year yields, same pattern, right? Big sweeping weekly downswing to the downside, looking for the lower high and maybe just the rollover as bonds start picking up a little bit more steam. If we continue going through this macro uncertainty and equities are out of favor, the bonds may just catch that bid, which is why I showed you last week. I did fire off a leap contract on the TLT call options for December of, or rather for 2027, right? I think you need to go really far out on these yields overall, because number one, they just don't move that fast. And you really need to give the time for these yields to come down and those Fed rate cuts to start getting priced in more and more into the markets. Gold remains still a very hot trade. Yesterday on the close was up another 1.1%. But in my opinion, guys, you're kind of just chasing gold at this point, right? Clear daily uptrend. What I'd like to see is a bit of a retest, maybe of the lower 3,000 to about 2,950 psychological. That would be a very nice breakout, retest, and run trade. Because right now, I mean, the daily overbought conditions, and even on the weekly, right? The weekly is just full expansion mode. You really don't want to be trapped buying the highs. If you can get not something like this, a little bit of a weekly pullback, that's when I'd be a bigger fan of maybe placing some swing trades on gold. I'm not saying that buys on gold right now will not be rewarded, but if you're looking to swing trade this with a little bit of size, you always want to respect your price action rules by looking for the retests of support or at least the EMAs before committing to any sizable more longs, right? But if any of you are holding gold as a part of a long-term portfolio, I mean, I wouldn't say it's any conditions to sell. It's just adding any more up here doesn't represent the best risk to reward, but gold can move over the course of this year, guys. 31, 3,200 would really not be surprising, but will it do it in one clean shot? Probably not, right? Probably going to do it in a few legs as it's been kind of moving through this market, as it in the last roughly 2 years worth of time. Moving on to Bitcoin right now. Well, suffice to say that Bitcoin has been doing a whole lot of nothing, guys. Constantly getting rejected. Can't even close above the 12 EMA, let alone close above that 200 above us. Who's in control? Well, obviously the bears, right? Try to get the daily uptrend going. They don't want anything to do with it right now. Unfortunately, this is kind of a bear flag hinting towards a rollover. We'll keep an eye on it though, but who's in control of the higher time frames here? Definitely the bears. Any push higher will be met with resistance 88,005 up to about 91,005. Big area, guys. So even if you get a nice little push to the upside, would not be surprised if the first reaction is a shoot down. Then it's up to the bulls to prove it to us on a longer duration weekly time frame that they want to reverse. It's going to take some time though. And if we just, roll over on the daily time frames right here, I think you already know where we're going on this growth trade, this risk on asset. You're coming right back down here to about 66,000, which was the liftoff zone of, prior resistance. We shot up from it after the election. Would not be surprised. So many things have given back all of their election gains. Is Bitcoin going to be the next asset to give it all back? Well, maybe. I'm not adding any Bitcoin here. It's in the middle of two levels, right? Either I need to see a clear recapture of the uptrend by the bulls, or I need to see a support entry trade. So my next add on Bitcoin would be somewhere to the downside over there. That's everything for your indexes and gold, Bitcoin, VIX, bonds, and everything else. Now let's dive into our big tech, shall we? So moving on first to Apple. Apple down another 0.61% on the day, and we know who's in full control of this chart on the weekly timeframes, guys. Definitely the weekly bears. Above us is very big resistance right now, 225 down to roughly 215. Apple's been really struggling to recapture this zone. You can see it's just rejecting as resistance. Short-term control as well has to go with the bears, guys. This bounce is way too weak. So if we were to roll over this hourly trend, which we kind of already are in the extended trading hours, but even the regular trading hours, guys, you get the lower high and start moving lower, it's not going to look good. That will be the end of your daily bounce. And the size of the daily bounce is very weak, guys. You're talking about not even like a 15-20% bounce. If you roll over from there, it would not be surprising out of resistance to the downside. Possible entries for a little bit of a short, even though it's extended now. Where you're heading is quite simply down to about 200 to 195. Still not the biggest fan of buying any Apple right now. It's just not sold off enough, right? Even at 220, the valuation is sky high and not that much revenue growth. At the end of the day, Apple is Apple. I do agree. They do a ton of buybacks, which is kind of cheating to increase their EPS. But I mean, the story is really the following, right? It's the revenue growth. It's just too soft compared to some of its tech sector peers. EPS growth has never been a problem for Apple, but the lack of innovation possibly starting to catch up with the company. iPhone sales have been reduced from a projected 5% growth over 2025 to only 2% at this point. Their wearables division as well is falling slightly short of estimate consensus. So overall, not the best time for Apple. Where I would get interested personally is anywhere below 200. So I'll be very patient waiting for those discounts, waiting for a 20+% pullback on Apple from the all-time highs. Right now, it's only 17%. There are many other tech companies, in my opinion, which represent better value for growth, in my humble opinion, right? So Apple, if it gives me a very good price, I might be tempted. But as of right now, no swing trades and no long-term portfolio entries for me either. Moving on to AMD. This one is different. This one has a favorable risk to reward profile. Now, before we get into the technicals, I'll go over the fundamentals again, right? Fundamentals, revenue growth, and EPS growth are fantastic. And when we get into NVIDIA's keynotes later, you'll see that the demand for AI is absolutely astronomical for at least the next 3, 4, 5 years. And NVIDIA will be a player in that, trading at only a 0.57 PEG ratio, 22 on a forward price to earnings ratio as well. Very cheap for the future growth of the company, guys. You're talking about a company right now that's only I mean, only $167 billion. In relation to NVIDIA, guys, it's like 15 times less market cap almost. Fantastic deal for AMD, in my opinion. Look at this EPS ramp, the best in the company's history, coming in the future, and the best revenue ramp in the company's history as well. So I do think it's a great chance to bid AMD. I'm not trying to convince you to bid AMD, but if you are a fan of this trade, I mean, we should be holding. And even I started a position in my new small long-term portfolio because I think the risk to reward, if we have a long-term time horizon, looking for that thesis of the next 2-3 years of expansion, looking pretty good. Obviously, the swing trades recently have been tough, though. Who's in control? Well, actually, the daily bulls. They put in a very nice move, looking for a higher low right now. Anything above 97.35, looking for a daily higher low for further price continuation. Now, it can obviously be rolled over, but we do have nice support below us, 101.37. The bulls are trying to find somewhat of a base of support over the last 4 weeks. Culmination in the last line of defense, 97.85. Unfortunately, though, sweeping weekly downtrend. We know this one has been very rough, at least over the last, let's call it 6 months since October, right? And in the event we flush down below with the rest of the market, where are we heading down to, guys? 82 to 70, which would be a heavy buy condition for me. It is now a decent add for a long-term portfolio, and I will be adding as we progress through these lower levels because the valuation right now is just so cheap. But I would not say the bulls are in a very great position right now. We're trying to round the corner, but I mean, you can guess, right? Until we get that weekly uptrend back, we cannot say that the monthly consolidation is finished just yet. So we got to be patient on AMD, but I do still think that in the next 2-3 years, all these purchases will be very highly rewarded. It has a lot of room to expand on those multiples. Moving on to Amazon right now. So Amazon down 1.5% on the day. And I did have one swing trade on Amazon. So I guess I'll show you the swing trades right now as we move through them. Amazon, I took a nice long dated wheel position on Amazon right here. $180 strike for $4.30. Now the contracts have since gone profitable by about 20%. We clipped this one for all intents and purposes at about 9:54 a.m. 9:54 a.m., guys, you know, it was pretty much very close to some of the lows of the day. After that, the stock did move higher. The reason I like that trade is because it's about 2.4% for 5 weeks, roughly the 0.5% rule that I tell all you guys about. And where's my break even on that? I'm at the 180 strike. That means I want to buy shares at 180 with a $4.30 credit, which means that my break even overall is like 175.70. Where is that on Amazon? Exactly where I want to buy it, guys. The 175 region right here. The next line of defense, huge support for the bulls. This is all the resistance of 2021. And if you ask me, if it comes back to the same share price as 2021, you got to look at the fundamentals. Has Amazon improved their fundamentals since 2021? Well, I don't know. You tell me. Look at profitability. Profitability used to be 7%. It's now 9 to 10%. Look at their revenue growth, right? And their EPS growth. EPS growth in 2021 was 3.24 EPS. This year, it'll be almost double. Very nice. 2 times the expansion for the same share price. Big fan. What about revenue back in 2021? It was $470 billion. What it's going to be this year? $700 billion. Have they improved both revenue and EPS and profitability? Yes. So if it comes down to the same share price, it's a very easy buy for me. That being said, even right now at 190, it's not a terrible portfolio add, which is why I also started off this position overweight in Amazon. Everything else was relatively equal. Microsoft a little bit underweight. Amazon was a 2 times larger buy than anything else. Even in my larger portfolio, Amazon is my biggest position by far. I think out of all the Mag 7 names, it has some of the best capacity to outperform in the next 3 to 5 years overall. That being said, it's a 1.49 peg and a under 30 forward price to earnings for the next at least 1 year on a forward basis. And the free cash flow yield is rising. That being said, in terms of the technicals, guys, well, the technicals, the bears are in full control, just like they are with the QQQs, right? Sweeping daily downtrend. The lower highs right now are set right about here. Since we now have a lower low, daily downtrend is resumed. The bulls were looking for the uptrend, couldn't get it done. New daily downtrend. The lower high is right here, 198.51. And we are into support, 196 down to about 186. What you need to see the bulls do if you want a reversal is an engulfing move at this point. Give me an engulfing move, reset the daily uptrend, then we will take a look at the size of the weekly bounce and if the bulls can actually claw back into that territory. If not, if the bounce is too weak, we're heading right back to the lows and possibly even lower, which is why I have those 180 short puts for a while in the future, guys. This is for April 25th. So this is me kind of forecasting or, you know, regardless of what happens. If it goes up, I'll make money. If it goes down, I get my shares. I win either way pretty much, right? I'll be playing it sometimes on a weekly basis, but for now, this very large contract is set for April 25, about 5 weeks away. Moving on to Google right now. Google down 2.34%, which leads us into the Google news, right? So Google to buy Wiz for $32 billion in its biggest deal in company history to boost cloud security. Now, Google is no stranger to making mergers and acquisitions, guys. As a matter of fact, this is the Wikipedia page, right? Google has acquired over 200 different companies, and this one is the largest of its kind. Wikipedia right here. I mean, I don't always use Wikipedia, but it's a very nice, interesting timeline. I know you guys can't see it. We're not going to go through it, but if you guys want to take a look at on your own, just look how many companies Google has acquired in the past. And it's not their first foray into purchasing companies such as Wiz in terms of cybersecurity. As a matter of fact, they did a few of them recently. Look, I have to scroll so much because Google's acquired so many companies. I have to scroll so much further. Here you go. The last one they did, the two last ones they did, as a matter of fact, one was Mandiant in 2022 for $5.4 billion. In that same year, a few months prior, we had Ceasefire, another Israeli cybersecurity company, which they paid $500 million for. They are no stranger to expanding cybersecurity for their cloud division. And a matter of fact, they put in a bid for that company last year. Last year, they put in a bid for $23 billion, and Wiz said no deal. So now Google with the shove, $32 billion. Now, some of you may think that's expensive, and objectively speaking, it is. But I'll remind you, where does Google stand in terms of its financials? Can they afford the deal? Well, let's have a look, shall we? Let's take a look at their balance sheet, currently sitting on $24 billion worth of cash. They will not use an all-cash deal, though. Look at the free cash flow per year that Google generates, right? $72 billion. Do you guys think they can afford it? Look at the debt, $28 billion only. That is not a lot of either debt-free cash flow or even debt to equity. We're not going to look at that ratio right away. Just to let you know, guys, they can afford the deal either in a combination of bonds, or rather debt, right? And possible future free cash flows or current cash on hands. Just suffice to say, the company can afford it. Did they overpay? I do think so a little bit. The valuation of the company is quite high. It was valued at $12 billion in a private funding round last May, with more than $500 million in annual recurring revenue as of mid-2024. This number, unfortunately, Routers doesn't report it. This number is now up to roughly $700 million, but still, right? You divide your $32 billion, which is the price they paid, right? Divided by only $700 million in revenue, which is like 0.7 if you want to use just easy numbers, right? But a 45 times forward price to sales. Now, the company is expanding the revenues in a fantastically aggressive clip, somewhat like CrowdStrike or like a Palo Alto Networks did in its early stages, right? But it is a very, very, very high price tag to pay for Google, but the integration into their cloud services is going to be quite good. And between you and I think they need it to compete with Amazon and Microsoft. Wiz works with cloud providers such as Amazon Web Services, Microsoft Azure, as well as Google Cloud, and counts Morgan Stanley, BMW, Louis Vuitton amongst its customers. Wiz's products will continue to be available across other major cloud services, which is good for Alphabet. If they're buying it, well, then at the end of the day, you categorize all that revenue towards Google, right? Alphabet expects the deal to close in 2026, subject to regulatory approvals. We will see. We will see if the DOJ and the antitrust, agents approve this deal, or if it's too big to be brought through and concluded. There will likely be a microscope on the deal by investors, given Google's lackluster historical track record with its capital allocation plan, specifically around M&A. Now, this is true. Google has not always made the best value for, or gotten the best value for its investments. It's always been able to integrate a majority of its investments into its services and then turn those into more improved efficiency or profitability. But sometimes, has Google overpaid for some of its products? Yes, but every now and then you have some huge winners, the likes of like YouTube or even Waze, when they bought Waze for under $1 billion, which allowed them to decently improve their Google Maps and traffic services as well. So, you can't win all your bets, but Google, although it has a questionable track record, we'll see what happens with Wiz, but I'm fairly confident in their ability to monetize this purchase on a longer term time horizon. For Google to be able to compete with Microsoft Azure for enterprise customers, it needs to be able to offer a deeper suite of services, including security software. This is true. They are not the leaders at all, and Google manages a ton of data, passwords, and everything in between, right? they really need to have a cutting edge cloud cybersecurity division. And I'm glad to say that although they are not able to build it in house, at least they're acquiring one of the best and fastest growing cybersecurity companies in the world right now. At least the company that was private, right? You can maybe say that, well, they should have put in a bid for CrowdStrike, but CrowdStrike is too big. It's like $100 billion company, right? Interest in the cybersecurity industry has risen since last year's global CrowdStrike outage roiled operations across industries, prompting companies to spend more on safeguarding their online domains. Several security companies based in Israel, founded by Israelis, have been acquired by Silicon Valley giants, including Simplify, which we went over, which was bought by Alphabet in 2022, and Own, which Salesforce acquired in 2024. Back in 2015, Wiz's founders sold cloud security firm Adullam to Microsoft. Wiz's founders, I mean, got to give it to these guys, right? They're making an absolute killing building cybersecurity companies and then just selling them for billions of dollars. Now, regulatory concerns, got to talk about this, right? Generally speaking, Google is not a leader in the cloud business, and Wiz will still be available on all other cloud services. Google had the cash and cash equivalents, which we went over, and it might have to seek financing for the deal. But, guys, the DOJ is currently pushing for measures, including a sale of the Chrome browser, to address what the judge said was an illegal search monopoly. If this deal gets blocked by the DOJ or any other regulatory body, guys, it's not going to help Google in the short term, of course, right? That's why there's some concern on the part of investors. Google is already highly under scrutiny. This is a very big deal, guys, a very big deal. Can it be, target of an antitrust case again? Yes, but we will see, guys. There's still long-term time horizon. The deal is set to conclude in 2026. So we'll keep an eye on this as the day moves on. But Google investors today not responding too well. At one point today, Google was down over 4%, right? Which is far more than they were willing to pay for Wiz, right? That would have been roughly a $100 billion drop in market cap, roughly $80-90 billion. They're only paying $32 billion for Wiz. So investors responding with a slightly more concerned tone. Now, who's in control here? Well, it has to be the bears. I was telling you guys about this yesterday. Not a very good bounce. And this was a bear flag, right? So now the bear flag, you get the follow through and the final flush, not daily oversold conditions just yet. Not looking too bad, though. I mean, we're having still positive bullish divergence, lower lows on the price, higher highs on the RSI. Will eventually the price start recapturing? Well, I mean, they're trying, holding desperately the 163 lows right there, which is a fairly large level, all things considered. I know it looks a bit weird on the weekly chart and the daily chart, but the reason I have this level labeled is because these are all your monthly candle closes and monthly areas of candle rejection. So it stands to argue if we break through there, you're coming right back down to the 2021 highs, lower support range 153 down to 140. Now, same analysis as Amazon. If Google comes down here, is it a good buy? Well, already at 165, it's a fantastic buy. A 1.23 forward peg with a forward 18.5 price to earnings. I know there's some uncertainty in Google, guys, but I mean, this is really a fantastic price overall. But if you want to pay the same prices as peak 2021, let's have a look at their fundamentals of 2021. Do they have better net margins right now? Well, yes, they do. Back then, 29.53, and right now, 28.62, but with a lot more free cash flow. Look at this free cash flow, guys. This is what I mean, right? Look at this increase in free cash flow. Fantastic increases in free cash flow, over, $5 billion more and accelerating to the upside. Do they have better EPS and revenue than 2021? Well, let's have a look, shall we? 2021 EPS, 561. 2025, 892. 50% boost there as well. In terms of revenue, do they have more revenue than 2021? Have a look, 257 billion and now 389. There you go, another 50+% bump. So we're getting the stock for the same price as late 2021, but with far better fundamentals. Sounds like a decent long-term bet to me. Short-term can be volatile. We know the bears are in control, and any loss of this level, this then becomes big resistance, can just end up with a flush, and the big zone down below here, 153 down to 140. I will be a firm buyer of Google the entire time that we consolidate into this range, if that's possible. If we get a nice bounce, get an engulfing move by the bulls, well, need to see it like Amazon, right? Daily downtrend perpetual. Give me a daily uptrend. Then we can talk about a weekly bounce. Then we can talk about the bulls' capacity on the weekly to reclaim some of these time frames. But as of right now, it's not looking good. It's not looking the best for Google, but perfect time to start DCAing. If you're a fan of Google, right? These buys are arguably much better buys than they were at similar price levels back in 2021. Moving on to Meta right now, down 3.73%. Meta accelerating its own move to the downside. Daily downtrend is clear as day as well on Meta. Lower highs stay planted right now, unfortunately, at the highs of yesterday, 612.52. So you got a nice little lower high right here. Meta clipping into its 200-day EMA. This was the last of the batch, guys. Well, I mean, maybe Apple. No, Apple actually broke below it. Meta was the only one, other than maybe Netflix. The 200 EMA is still very low. Meta, last of the Mag 7 that was not clipping into its 200. Now it has done it. So at this point in time, any bounce could just be looking for a lower high and to further lower lows until the bulls break that pattern. Need to see an engulfing move, nice bounce size, recapture the daily uptrend if you want to say this weekly downswing is finished. I was warning you guys of this yesterday and all of last week as well. With such a big move down, this was a weekly uptrend, with such a big engulfing move, the likelihood of either a lower high and rollover or just a straight rollover is highly probable, and now we have it. So Meta officially the last of the Mag 7 to lose the weekly uptrend. Now, I'll remind you, any bounce on the weekly looking for a lower high, then it's up to the bulls to prove it to us. Can they get it back? If the bounce is too shallow, though, and get rejected at resistance, 618 to 630, well, just a lower high into maybe lower low for some continuation. If you ask me, Will, where do you really want to buy Meta? Not here, even though we're into support. If we come down here, though, 531 to 480 rough, that's going to be a very fantastic level, because even now at 592, the PEG ratio is a little bit high. You can look at forward price to earnings, but I like to look what I'm paying, earnings, and the growth rate as well. Right now at 190, it's not the best of the Mag 7, not even close, and a free cash flow yield of 3.05. It's not terrible, but if we come down all the way here, 497, which would be another, roughly another 10, 15%. I'm not saying it's going to go there. I'm just saying if it goes down there, this will be a much better deal, and this will be a much better deal as well. Those are my thoughts on Meta. But as of right now, not terrible for a small ad if you're a fan of Meta, but also not as good as of a deal as Amazon or Google, in my opinion. Moving on to Microsoft right now, 1.33% to the downside. Microsoft not flushing his lows with its sector peers. Still looking for the daily higher lows for the trend change. But even if they get it, right, you're looking right into support, into resistance rather, 394 up to roughly 408 for Microsoft. It was a huge area, guys, for about a year's worth of time. So for the bulls to get through this one, they're going to really need some momentum. In the event the bulls cannot get it done, because this bounce, although was a nice bounce, was only where they closed it, about a 50% bounce. It peaked a little bit yesterday before getting rejected at 618. So it's a good size bounce. The bulls have some decent odds at getting the daily uptrend back. It's just I'm wary of how we react to this resistance range if we get into it. If they cannot get it done and just roll over with the rest of the markets, we're heading right back down to the lower end of support, guys, which is 378 down to roughly 365. I'll be buying Microsoft this entire time that it's declining for the long-term portfolios, but also writing puts under the market on big red days on Microsoft when they bring in the volatility and we can get some beautiful strikes down into the deep end of support. Big fan of writing short puts if you have the capital for it and you're looking for one of the more defensive company names in all of big tech, right? Clear defensive name. I mean, even in 2022, guys, did their EPS drop through that bear market? No, right? Look at this EPS expansion. Look at the revenue expansion. Microsoft arguably has some of the best net margins out of all big tech as well, and arguably has as well one of the best balance sheets in all of big tech too. Tremendous free cash flow, tremendous cash and cash equivalents. Very, very well-run company. Moving on to Netflix right now. So Netflix giving back some of their earlier gains yesterday, filling that little gap. We had a gap up open yesterday, and now we actually filled it. But Netflix is actually in a daily uptrend. Now, using this prior resistance when we were under it as support, 935 down to about 900 psychological, right? It's a temporary daily uptrend, but what are we in the context of? In the context of a very large weekly sweeping down move. So if the markets just roll over continuously and Netflix gets caught as well, you're pretty much looking at a weekly lower high, maybe into the lower low flush. That would be a very ugly head and shoulders for Netflix. Fantastic company, though, at 860, when we did the valuation down here, that's when it gets more manageable, right? 34.6 on a forward basis. A little bit high, but then again, they're growing EPS very fast as well at a 1.51 peg at 860. Free cash flow yield is a bit low, so you're not getting the best deal on Netflix, even up here. If I'm a long-term shareholder, do I have any reason to sell? No, because their earnings were absolutely fantastic, and the growth of the company in the future is fantastic. But if I'm looking for a heavy ad on Netflix, if you ask me, where do I really want to buy? Because I've been a holder of Netflix, guys, since like 2018, right? I bought again after this dip, didn't get the lows, but I was buying here progressively. Where would I be a big fan of buying a decent sized allocation for Netflix if I'm not just DCAing on the way down and I'm waiting for one big level? It would probably have to be anything under 800, guys. Like 800 to 700 would be actually an area that I'd consider adding in a heavier fashion for me specifically. And as of right now, no real swing trades for me either. Price action is just a little bit too messy, right? It's the weekly possible rollover. The daily uptrend is nice, but like you're kind of facing a waterfall of bears potentially, and the valuation would support a little bit more compression, right? Moving on to NVIDIA right now. So NVIDIA as well, we have some news to take a look at for NVIDIA. But before we do, I want to show you one little swing trade that I took very early this morning when 15-minute conditions were extremely oversold at 10 in the morning, guys. We got a little cheeky little swing trade here, selling some puts. NVIDIA, this was a top 5 options play. I was telling you guys to watch out for these levels. They unlocked themselves this morning, and I almost clipped the top, or rather, well, the top of the options contract for the day. The low of the day, 57 cents was the credit here on those short puts. 105 strike, guys. We were at 114, and I went for the 105 strike for Friday. 105 is all the way down here where I actually want to buy some shares. And I was able to close that in one single day for over half, or rather over 50% profit, right? Almost 60% profit. Matter of fact, I was late on sending this alert. And by the time I sent it, the contracts were down 18, 19. So some of my members got an even better exit than me. Very quick and easy swing trades on NVIDIA, benefiting from that volatility. Same thing I showed you guys in the top 5 options. Now, got to talk about the news, right? Because although the news, we had a little bit of a rally into the event, and then as all of NVIDIA's events in the last year at this point have gone, they've all been sell the news, because we didn't really get anything new. Although the news was fun and a very nice piece to watch, we didn't get anything truly new out of NVIDIA, except of course their new chip architecture is coming out late this year and early next year. Let's have a look into it as well, right? So moving on in, NVIDIA's Rubin AI chip to include GPU, CPU, and networking chips. This is the next iteration of NVIDIA's chips after the Blackwell series. The company said they were well placed to navigate a shift in the AI industry in which businesses are moving from training AI models to getting detailed answers from them. This is the move from training to what they call inference in the industry, right? Training a large language model is very easy. You just give it a bunch of inputs, a bunch of historical data, and you've trained the model. But inference is it being able to have logical reasoning and move through complex problems thinking on its own. That requires a lot more compute power than only training. A lot more, as a matter of fact. The amount of computation we need as a result of agentic AI, talking about using AI as agents, right? Customer support agents, voice agents, or just agents that seek to replace normal human reasoning tasks, right? As a result of reasoning, is easily 100 times more than we thought was needed this time last year, Jensen said, referring to autonomous AI agents that require little human intervention for routine tasks. He added that NVIDIA's pitch that the AI industry was going to be built on their chips in the long run would not change investor expectations for the short term. Their narrative remains really unchanged. New chips. Huang announced new chips, including its next GPU chip, Blackwell Ultra, my forehead's itchy, which will be available in the second half of this year and feature more memory than the current generation of its flagship Blackwell. That would be expected, right? You would hope that NVIDIA's chips in the future are faster, smaller, more power efficient, and of course have more memory, meaning it can support larger AI models. If you take too long to answer a question, the customer is not going to come back. This is like web search. Best example he could give for that. He also revealed details of a chip system called Vera Rubin, which will succeed Blackwell and feature faster speeds. It will be released in the second half of 2026. NVIDIA said last month orders for Blackwell were amazing. So there was a little bit of forward guidance. Not enough to rally the share price, though. Everybody knew that already. Huang also introduced a powerful new personal computer called DGX Workstation. This is pretty cool. Based on Blackwell chips, saying it will be made by Dell, Lenovo, and HP, amongst others. The device, which follows a smaller desktop machine introduced earlier this year, is a challenge to some of Apple's top-end Macs. He announced new software called Dynamo, which NVIDIA released for free and is meant to speed up the process of reasoning. This was also a very good point in that GTC conference. Huang also introduced that automaker GM has selected NVIDIA to build its self-driving car fleet. So overall, guys, did we learn anything new other than that there's new chips coming in the future? No. Was there any crazy guidance for Blackwell other than him saying that the orders last month were amazing? No, but that was to be expected. He provided us that guidance already in their earnings. Now, if you go through the slides, everything was really cool. If you guys want to look at like a tech channel on YouTube, a lot of YouTubers are probably doing like a 10, 15-minute summary, a detailed summary. That's not the purpose of this channel. We're just trying to find Is there anything meaningful to increase the value of shares in the very short term? And in my opinion, the answer was no. But overall, the conference was quite cool. Brought a little robot on stage. That was pretty cute. Presented his, the Blackwell architecture moving into the Blackwell Ultra, moving into Vera Rubin. I listened to the entire conference for the most part. We're just going to jump through these slides quickly. Here's Jensen and his twin brother here. Moving on further, right? We have Disney Research also utilizing these to go from, with Google at the help of Google DeepMind as well, proving, that you can really build powerful AI built into robotics, possibly for either entertainment purposes or agentic AI workloads, as they call them. This is the NVIDIA Omniverse with Cosmos. Really, really cool, right? Modeling and then putting things into actual production with being able to just generate everything essentially in the NVIDIA Omniverse before putting it into real world applications. Very, very, very cool tools that AI are able to build, right? The AI tools now are able to kind of like design and build out an entire production capacity for a company, right? Rather than an engineer or an architect designing it from scratch. Really, really cool. More talk about robotics, which is obviously going to be the future, right? Moving on further, right? Simulate, deploy, and then train. They're saying that they need like 50 million labor units short right now. We know very clearly that the world has a severe shortage of human laborers, 50 million to be exact. That's obviously their guidance or their expectations of it. They have a lot of enterprise tools. We're not going to go through everything, but I just want to show you, right, the gist of everything. We didn't really learn anything massive, but he did talk about a lot about data centers being essentially AI factories. There's some of the little bits of stats on the Blackwell Ultra models, 2 times faster, 1.5 times faster than the current Blackwells and whatnot, depending on, amount of instructions or in terms of the amount of revenue, in terms of the amount in terms of the amount of revenue. Here's one of the little Omniverse AI factories, right? AI factories can be designed and anticipating using NVIDIA's Omniverse technology, allowing for optimized layout and efficiency in the quickest and most collaborative way. So it's just a whole bunch of slides like this. I mean, Blackwell with a giant leap in inference performance, right? Obviously, we know that there's a lot more throughput per megawatt used, and obviously a lot faster responses by the Blackwell edition versus their former Hopper. And this curve will only get larger as time moves on as well. So a lot more very, very cool stuff, right? But did we learn anything new? No. Were there some fancy slides and fancy pictures and fancy visuals? Yes. Here's a bunch of the server racks that different people are using across different data centers. Crazy how these data centers look. And then you also have several partnerships. The newest one is GM, of course, but Mercedes has been using NVIDIA as a partnership in their NVIDIA Drive Cloud segment, where they kind of use a lot of cloud computing to drive virtual miles as opposed to something like a Tesla that drives real models. I'll remind you, another car manufacturer that uses NVIDIA's drive system is also BYD, which arguably has some of the best full self-driving software on the market right now. At least they are the highest rated in terms of full self-driving capacity. That's kind of like a quick summary of the NVIDIA event, right? That's why the share price didn't move too much, because there wasn't anything concrete about the numbers. We know that the AI industry is going to be absolutely huge in the future. We know data centers are going to be absolutely massive. Was there anything to move the share price today? Unfortunately not, right? Which is why you saw somewhat of a muted response. Lower highs are still set. Well, I mean, now they're set right here. 122.77. The size of the bounce was somewhat adequate on NVIDIA, right? Almost a 618 bounce, but just could not get through that 200-day EMA. This is this green line right here, and could not get all the way up to resistance 125 up to a 133 before kind of curling back. But they did create a decent amount of space, right? We'll see. Can the bulls turn this around for a higher low, for possible a trend change and attack this resistance area? We'll see. But below us is coming a nice area of support again, 111 down to 102. I'll be looking again, guys. If NVIDIA drops again, well, I'll be making the exact same play. I was able to get into the play and kind of close it midway through the afternoon. Now, if NVIDIA drops tomorrow again, I'll be able to make one of the same plays, just targeting the lower end of the support range as close as possible, $200, while NVIDIA remains in this fairly decisive weekly downtrend overall. We will see top to bottom how much the full decline on NVIDIA is, but I'll be a fan of buying lower 100s first, is my first buy, and then down to about 90 to about $80. I know it sounds cheap. I'm not saying it's going to get there. I'm just saying where I want to actually start bidding this fantastic company to make sure that I get the best deal possible. As of right now, though, it's not terrible. I mean, at 115, you're looking at a 1.1 peg. It's really not that bad. I mean, this is one of the more fair valuations that NVIDIA's had, at least over the last like 2 years. Moving on to Tesla right now. So Tesla just continues, unfortunately, being Tesla right now, down another 5.34%. I was warning you guys yesterday as well that the rollover was highly likely because this weekly downswing is just way too strong. A lot of things working against Tesla right now, namely the fundamentals, them being an expensive company, and we're in the midst of a valuation compression right now at 235, guys. There's still a 4 peg. It is still a 4 peg and still a forward 83 price to earnings. So it can still fall a decent amount more, let alone all the things that have been happening around, you know, the brand with Elon Musk and what he's doing with Doge. A lot of people don't agree with it. I'm not here to say whether it's good or bad. Obviously, it takes away from the focus as him as CEO of Tesla. More people would like to see him only being the CEO of Tesla and his other businesses and not dive into politics. Take from that what you will, right? Moving on down, daily downtrend is clear as day, right? Lower highs are set right here at about 254, and now we're approaching support once again, 220 all the way down to roughly $190. Not looking the best on Tesla right now until the bulls get a daily uptrend going. You cannot say this weekly downswing is finished just yet. We will see how they react to support. First touch, they got into it. They reacted nicely after that 15% down day. Can they maybe find a base of support? We will see, guys. But as of right now, the selling pressure is very, very, very strong on this company. Moving on to Palantir right now, down about 4% on the day. But Palantir is not doing terrible, right? Now, we know that the daily bulls had the control overall, or the daily bears, rather, had control. Nice little bounce right here. How much of a size of a bounce was it? Well, I'm glad you asked. It was roughly a 78% bounce. Now back above support, which is 84, down about 77. So they do have a chance of resetting the daily uptrend. But if the markets keep unraveling, guys, you think Palantir is going to do it on its own, just rally? Probably not. And when you take a look at this weekly time frame, it does look like we're trying to find a base of support. The bears have not been able to close below this support for the last 4 weeks overall. But any attempt at pushing higher, I think, will just result in a lower high and then maybe on to some consolidation until their earnings, as there's not many catalysts for Palantir, nor the overall market to really start clipping into brand new all-time highs. So that's what I would be wary of. The worst possibility is the weekly lower highs are set and we might be looking for a rollover. If you ask me, where would I consider buying Palantir? You may not like the answer, but keep in mind, I have Palantir shares, guys, from $11 all the way back here. That's my average cost. Now, I bought here and then bought, and then it took a while for me to be rewarded. But as a Palantir shareholder, I'm telling you that I probably would not buy any shares $1 over 60 bucks. As a Palantir shareholder, right? Just got to be honest with the valuation right now. So I'm looking for to get as cheap entry as possible. If I don't get it, fine. I still have some shares. But if I do get it, this is where I kind of load back up as I've been kind of trimming the entire way up. My most recent sale was like a 104. I didn't get the top, but I mean, you know, I sold a very happy with the profits that I took on Palantir so far. And now lastly, SOFI. SOFI down about 3% overall. I mean, not the best, not the worst day for SOFI. They're still kind of struggling right there. You know who's in control, of course. The daily bears are in absolute full control. Lower highs pretty much are set right now. The bulls are looking for the higher low and the trend change. Now, at least we're above support, right? This whole 1170 down to roughly 953 is huge support. It comes back all the way from the IPO. Struggle and congestion here. Big resistance a few times when the bulls try to push into it. And now there's a lot of moving averages there as well. Fantastic area for SOFI if we're looking for accumulation of a longer term position, right? Moving on to the monthly, we're still just looking for monthly higher lows for possible further trend continuation. It may take a while, but SOFI has a very good business. They're improving profitability, not a bad trade. I'm a very big fan of selling puts down here in, you know, the 11 all the way down to $9 range. That's how I'll accumulate my shares. Selling puts, and if I get assigned, no problem at all. I'll stack some shares. And if I don't get assigned, I just get to collect some premium. That's why I love selling puts, guys. Worst case, you end up with shares you wanted to buy anyways. The best case, well, best case, you don't end up with shares, but you pocket some premium, right? If you don't get filled on that, well, at least you get to pocket some premium. But until I see a new daily uptrend, you cannot say that this weekly move down is finished just yet, as the weekly bears remain in full control. That is everything we had for today, guys. We'll go over some more trades maybe tomorrow after Powell, but you know, the video last Friday, the video on Sunday, and the video on Monday, we went through a ton of different trades, anywhere from Uber to a number of other growth names that I cover a lot on the channel, to some value and defensive names. So if you're looking for some of those, the Friday video, the Sunday video, the Monday video had those. But as of right now, or rather, no, sorry, the Friday and the Sunday videos had those. As of right now, though, we're just going to focus on big tech and some of the news releases. Tomorrow, I might take a quick little glimpse at some of those swing trades with you guys. But that's it for me today. If you guys enjoyed the video, consider dropping a like. Would appreciate it for the growth of the channel. Also, consider subscribing to the channel if you're new. Would love to have you back. We do these every Monday to Friday after the close. And lastly, if you have any questions, guys, always feel free to ask me down below in the comments section. Any questions on stocks, ETFs, options, the macro, the long-term portfolios, anything you want, I will be glad to answer. I'll try to get back to all you guys tonight or tomorrow. And in the event you guys want all of these trade alerts in real time, if you want to join a community of like-minded traders and long-term investors who trade with very consistent trading strategies, not that aggressive, fairly conservative, but we're just looking to compound our gains over time, as you've seen me do for the last 2.5 years now, or rather 2 years on the channel. Well, and you want to have access to all these trades in real time, the link to the Discord is down below. Here are all the trades since the inception of the Discord. The red little circles are losses. The green check marks are win. Always very transparent with my wins and the losses. I've shown you all of them over the last 2 years of trading. This Discord right now is about 6-7 months old. These are all the trades since the inception. So you get access to all those. The wheel trades, the long-term portfolio trades, the call options, or either covered call trades, the put credit spreads, the call debit spreads, everything in between, whether you have a small, medium, or large account. There's pretty much something in there for everybody. You also get access to our private morning live streams every morning, which I run for about 2 hours, where I trade lives and take all your questions on your stocks and your options. And if you don't have time to watch them, they are all recorded. You also have access to all our chat rooms where you can ask me your questions in real time, and I'm very fast to answer as well. You get private videos in which I go through advanced strategies, how to grow small accounts into big accounts, the consistent way, not going for weekly call options, consistent way, right, with different trading strategies for different account sizes, more advanced option strategies that I don't show on YouTube either. Members have been finding tremendous value from there. And also, I share all of my watch lists, all of my technical analysis on all of these companies, right? Whenever you see TA, support, resistance lines, or whatever I have on there, and you have these annotations for earnings and stuff like that with evaluation, with the click of a button, guys, you get to copy all of my watch lists and all of my technical analysis. It takes literally 10 seconds to set up. That's a good little feature as well. If any of that interests you guys, the link to the Discord is down below. And if not, well, I guess I'll see you back on the channel. Pleasure as always. Love you guys. Keep your heads up. Stay focused. Maximize your income this year, guys. Maximize your incomes. Minimize your expenses and invest the difference into high quality companies or ETFs. And your future self will thank you. And of course, I'll be bringing you guys the trades on a weekly basis. We're not done trading, but also this year, guys, focus on the long-term portfolios. Now is really the time. If you build them properly, your long-term selves will thank you, okay? So take care, guys. That's it for me. I'll see you tomorrow. And have fun with Jerome Powell. We'll recap that tomorrow. Take care.